So the agenda for today, my journey and experience. So how I reached financial independence and quit my job at 33. That was 6 years ago. My simple portfolio. Today I will share with you how I invest and how I got to this investment portfolio. Key lessons on investing in financial independence. So basically my reflection on my own journey. Hopefully that this is going to help you. And then how I would pursue financial independence if I was starting today. So saving more, investing better, and earning more. And I will spend quite a bit of time on earning more because I would say since I've quit my job, I've actually learned a lot about earning more money. Even though I'm not doing necessarily it, I've learned a lot. So my views on things have a bit changed in that space. So for those who don't know me, I live a bit of a strange life in the sense that I don't have to work for money anymore. And so this is my life today. I spend most of my time with my kids and my wife and my family between Poland and Belgium because my wife's from Poland. And today, actually, we are in Poland and we have friends over and we decided to go to the beach. And so we're at the beach. I'm not at home. This is just my laptop. I don't have the usual setup. And my wife is outside there with friends having, a bit of wine and cheese and, and a barbecue. And I'm here speaking to you guys. But basically, we are extremely thankful and lucky to have this life. And it just, as you will see in the story today, it's just a series of events that kind of happened and that I did and things that I did and we did with my wife that led us to where we are today. And certainly we want to share this, right? The reason this group exists and the reason I launched it is because I was looking for people like me and also share, I was looking for ways to share my journey to help others. But it wasn't always like this. This is a picture of me in Dubai in 2011. I had just landed there with an internship. I was paid 1,100 euros a month for an internship, 5 months internship. And I might look successful and, lying on the beach in Dubai. But at the end of those 5 months, I was actually broke because I lost my money. Stupid mistake. I just carried cash with me in the pocket and I went to the airport. And when I arrived home back in Belgium, I didn't have any of the cash. So anyway, I'm not going to go into the details. Basically, it wasn't always as it is today. Basically, at that point, this Sebastian here didn't know anything about financial independence and investing, any of this. Actually, I thought money was kind of the thing. I just needed to pay the bills, right? But going to Dubai, basically leaving Belgium, leaving the comfort of a place that is safe, where there's like a system that's kind of there to take care of us in a way, right? Yes, taxes, social security, pension, and where a lot of stuff is already set up in a way that basically, because of the pension system, you are saving automatically, forced to save for your retirement. But moving to Dubai was basically a big change because all of a sudden I wasn't contributing to my pension anymore and I had to find a way to do this on my own, right? No social security, which means that when my internship ended, I didn't have chômage, I didn't have any social security benefit that would get me going. I had to rely on my own financial means. And so basically going there and getting out of Belgium forced me to take control of my finances. And that's the biggest, I would say that's the biggest factor in my journey. If I had not taken that internship and I had gotten a job in Belgium, I wouldn't be speaking to you today. I'm almost 100% certain I would not have reached financial independence at 33. I would be just on a regular trajectory, job, house, mortgage, probably, bigger house, bigger car, like all sorts of stuff like this, but certainly not like living the life of freedom that I did today. Anyway, so getting out of my comfort zone was really the first step to this. And this is because it brought me in a place where there was opportunity, right? I got lucky also to go to Dubai and not to some other place where I could have had an internship in, I was doing an internship in energy efficiency for buildings, and I was trying to be involved in a project to build a zero emission, zero waste city, which is called Masdar in Abu Dhabi. And I landed an internship that's kind of related, but wasn't working on that. Anyway, I got to a place where when you deliver higher value and you work harder, you get rewarded more, right? So it's a bit more of the Wild West, right? There's a bigger discrepancy between the lower salary and the highest salary. And it's very capitalistic in the sense that the more you deliver, the more you get in return. Also, I was put in a place that was very different, very new, very challenging. And so learning fast was the only way to survive. And so I did learn fast and progressed, right? So all of this together combined with the fact that I actually successfully grew within my role and my career, right? In the 7 years I was there, I started with this internship. I was there for 7.5 years. I started with this internship. At the end of the internship, I was broke. And then the next 7 years, I started on the 1st of August, 2011, my job. And I progressed quite fast all the way to quitting on the 31st of July, 2018, so 6 years ago. And this basically allowed me to have a high income. So it's really being in that place and being very successful in sort of adapting to the difficulty of the job and delivering high value stuff in a place where high value is rewarded nicely, right? So I got a really high salary. I didn't have any pension or social security, as I was saying earlier, so I was forced to look for a solution myself. And everyone around there, what people were doing for their pension was investing in real estate, which is a very understandable way of doing so, but also investing through long-term saving plans that are sold by banks and financial advisors, right? Clearly, they make a massive commission when they sell one of those. So getting someone to sign and commit for 10, 15, 25 years, making contribution to a very expensive product was obviously, it's a very lucrative business, and it still is today, right? And I started by doing that. I basically spoke to all the financial advisors I could find. I selected the very best, most academic, like the highest type of achievements, certificates, recommendations, all of this. And that person still sold me, the regular, very expensive plan, despite speaking about like trying to make this as optimal as possible. But I kept searching. So I didn't do this and then stop. I kept searching. I think that's what differentiates me from most of the expats there, because a lot of people have those plans, but once they have those plans, they're happy to do something else. But for me, I realized because I was in a place where money was important, and because I had been broke and I knew I had to manage this properly, I kept searching, and I actually managed to understand how those plans work. And I actually managed to find, at some point, I discovered that it was possible to invest in the stock market in a simple and effective way with index funds, right? So DIY index investing, that was a big discovery. And so I started saving and putting money aside like this for my pension, 65, right? At that point, I wasn't thinking, oh, I can invest in index funds, I'm going to retire at 33. No, I was like, okay, how much do I need when I retire at 65 or 67? So I did the math. I was like, well, I want to have at least 3,000 euros adjusted for inflation. So that would be like 5, 6, 7,000 euros in the future. And so I need to invest in a way where I can withdraw that money and be able to live for 30 years. And that was the math at that point, the regular way of thinking about financial independence. Oh, sorry, early retirement. Sorry, no, regular retirement. It's only later that I discovered financial independence. So certainly that's a better investment than, so higher income and better investment. These are two key elements of my journey, right? So there's people making a lot of money in Dubai, but they don't have index investing. And so anyway, we'll get back to this, but basically it's a combination of elements. So higher income played a big role, better investment played a massive role. Now, because I was forced to live in a country where everything was different, culturally mostly, I had to understand my values. I had really to think about this through and through. And I realized that what I do value is basically being able to do what I want in my life, which is having freedom and time. So, options to choose. I love living people I love and doing things that people I love, basically simple stuff, right? But realizing that this is what I actually wanted allowed me to realize that I didn't have to buy stuff, right? What I don't value, I'm going to speak about my wife in a sec. What I don't value is expensive stuff. Now, I'm saying this now, right? But back then, the ego, actually, I still have ego around stuff, right? Around like owning things. But back then, it did push me to buy a sports car at some point, right? Only later to realize that this sports car was costing me months and maybe years of freedom. So at some point I actually sold it, right? And I downscale in the type of driving that I do and how I move from one place to another. And I ended up doing shared carpooling with my wife. We had a tiny car there, and we were just carpooling, and I was using metro and public transport. It was amazing. Anyway, saved a lot of money, but what I'm saying is I'm not completely like immune to ego-driven purchases. And that was one, and certainly the biggest one that I can think of in my journey. But I realized that I value freedom more than those, right? So it's not that I don't value those, is that if they cost me freedom, then I'm not willing to spend money there, right? I don't necessarily value bigger, fancier house and car. Actually, I know part of me wants it, right? It's like, I want to be comfortable. If I can afford it, why not? All of that, yes. But I'm not willing to exchange that. Like, I'm not willing to give away freedom for this, right? And I think that's how the way I think about money helped me get to where I am today. And then expensive stuff for consumption, of course, that's not even today. I'm not interested in that. But basically, I'd rather buy freedom than stuff. That's been quite important. And this is something that happened when I realized that financial independence was the thing, right? So I told you earlier that at first I was just saving for my retirement, 65. I just wanted to invest enough so that I could get there, and the rest I could spend. And then at some point, something happened in my brain. I was like, wait, so if I put more, I could stop working earlier. But it took me a while to get to this. I mean, it's like months between the moment I started investing in index funds and the moment I realized I can actually stop earlier, right? And this is thanks to the discovery of the financial independence movement in the US, right? Mr. Money Mustache, Jill Collins, all of this, and diving into all these podcasts, blogs, and books, and all this crazy stuff, which, a lot of you have gone through as well, and some of you are just discovering now. But it's a normal phase to just jump in and just dive and consume everything that's on the topic, understanding and then implementing. And that's when I reshuffled, and at some point I was like, oh, I can actually stop working at 55. And then, things got better with my work and my finances. Oh, I can start working at 50, 45, 40, 35. And then one day I was like, oh, next year I can start working. And I was 32. So I knew that at 33, 34 latest, depending on the stock market a little bit as well, I would be able to stop. So it's kind of it's an ongoing process. So for those of you who, might be doing some math now around financial independence, and you realize, oh, financial independence is like, it's in a very long time. It might be, in 20 years, whatever, when you do the first estimates. Know that, or hopefully, as you improve things and as you make progress career-wise, also in the way you manage money in all sorts of ways, there's a good chance that this time is going to reduce gradually and we actually get there really fast. Anyway, so that's some hope for those of you who feel like the goal is very far. And then something that's quite important is that I met my wife. And I met my wife by doing activities that were aligned with my values. And so that kind of tends to bring together people who are aligned in their values and share common values. And basically meeting my wife played a huge role in my journey too. So something that's important to realize is that I didn't do this alone. We did this together, and she contributed to our financial freedom as much as I did, right? And she was in a similar stage in life where she was kind of, her career was starting to kick off, and she was looking to invest, but she wasn't sure. She was looking for pension, and then we start speaking, And so she's investing the same way I'm investing. And we've built all of this together, right? So I certainly don't take all the credit for this. Technically, financially, it's really just half. Okay, this is a picture of us in one of our low-cost trips to a really interesting island called Socotra, close to Yemen, by the way. So I don't think this island is easily accessible nowadays, but that's the kind of trip we would do, right? So we love traveling, kind of low cost and going around adventuring, right? Before we had kids, of course. So despite pursuing financial independence and aiming for freedom, like as fast as possible, potentially, we were still enjoying life all the time. Right? It wasn't like the full frugal rice and beans, live like a monk type journey, not at all, right? And that's certainly not something I recommend. You need to enjoy the journey, and we did. And you'll see that looking back, I would probably do this differently even. Anyway, but we did enjoy the journey and very happy. The biggest discovery during all this time, something that I've already hinted at, is that I can invest in the stock market simply, safely, and effectively in less than 5 minutes per month. It doesn't take much time to actually do once you know what you're doing, right? So the learning part is something that takes time. And we're not going to cover that today because it takes much more than just a couple of hours of life. But once you know, it really is super passive, right? It's very little time. And I can invest to a point where my portfolio makes enough money to cover my expenses. Right? So financial independence isn't some kind of magic trick. It's just math, right? You invest, you put your money to work in companies that are, doing work, producing value, generating income and profit. And so you invest in those until the profit from all your investments on aggregate over the long term give you certainty that you can withdraw some of that money and pay yourself. And that money that you withdraw covers your expenses. And that's when you reach financial independence. So for those of you who are new to the concept, that's kind of a way of describing it. So basically, you can buy freedom. And this is the biggest discovery for me at that point, is like, I can actually spend money on freedom instead of spending money on ego-driven purchases or expensive stuff, which, I was also tempted to get, right? And over there in Dubai, everyone is tempted to get, and everyone spends that money, right? In that way, like in a way, because when you can't afford it, why not? And that's why people work there. They make a lot of people make way more money than we ever did, me and my wife, or we could ever dream of even. And they still come home almost broke. Why? Because it's just easy to spend to improve the quality of life. But mostly it's like spending on expensive stuff. And often I would say, I think a lot of people like they do this consciously, but a lot of people do this because they don't know there's an alternative, which is instead of buying stuff, you can buy freedom. So to me, the biggest message I have for people who are, you know, thinking about money in general is that this is something you need to know it's possible. Now, it's not easy and it doesn't come in just one day, 1 month, or a year. It's a very long process, but it's possible. And when you buy freedom, it doesn't take 20 years to get to freedom. It's something that you build gradually, right? So when you start investing 100 euros, 1,000 euros, 10,000 euros, every time you put money in there, you are building more security, more control, more freedom. Every time it gives you more options, gradually more and more and more. And at first it's like, well, I have enough that if I ever lose my job, I'll be okay because I'll have, social security payment, but I also have an extra cushion, right? So I'm less stressed about losing my job, a little bit less, which, after increasing even more, you'll be like, oh, now I can actually negotiate better with my employer because the stuff I don't want to do, the stuff I'd like to do. And now if he says no, well, I have options. It's okay. I can look for something else and I'm not scared of being without a job. So just having that freedom there is already something that's quite life-changing because a lot of people don't even think it that way, right? They're like, oh, I've got mortgage payment, I've got the kids' school, I've got this, I've got the car, this is leaves and this, I've got this other stuff. But when you do the math and you realize that you have runway to basically make changes and that it's okay for a while you don't make money, then you can make big changes in your life. And I think that's the biggest and most important part. The power, the benefit of pursuing financial independence is that even from early on, you can make those changes, right? You can even choose to go part-time much earlier than most people would ever think of. Why? Because you have good, healthy, potentially lean finances, right? And there's an example of people in the community who live like this. They have a very simple lifestyle. They don't spend much, which allows us to work part-time and they're investing at the same time, right? And so this is the power of financial independence. Is it gives us choice instead of being trapped in, kind of like, it looks like we have only one path in life, right? Grow up, go school, go uni, get a job, get a car, get a house, get married, have kids, keep going, work until 65, right? And every time upgrade when you can. Take the biggest loan you can to get the biggest house you can because everyone is telling you that's the surest way of making money. That's not the only way. And if you value freedom more than all that, then you can get freedom much earlier and without having to pursue all of this crazy stuff. Anyway, a lot of rambling today. Have a lot to cover, so I need to continue. So how I choose to spend my money, this is basically what led me to financial independence, is that I realized I could spend more money on freedom than on most other non-essential stuff. And once I knew I could spend on freedom, I would put most of it there. That's it, right? And obviously it's a combination of this understanding plus the fact that I was earning a lot of money, I was able to save a lot of money, and I knew how to invest. Right? So it's a combination of things to get to financial independence. And I have a graph somewhere. Oh, here it is. So it's a combination of different aspects. To be able to get to financial independence, you need to value freedom. That's one. Otherwise, why chase? You can chase wealth, but then it's not financial independence in the sense of having more options in life. If you value freedom and time and the opportunity to make choices in life, that's an important first step. You need to know that you can. You need to know that it's actually possible. And so I'm here to tell you, yes, it's possible. I'm an example, and there's a lot of people in the community doing this, but a lot of people don't even know they can, right? So part of what I do today is speaking about this so that more people know they can, right? Just knowing this changes lives, right? It's not just, obviously my story is extreme, but there's a lot of people in Belgium actually reaching financial independence with Belgian jobs, right? So yes, it's possible. And then you need to be able to save more, invest better, and to be able to save even more, then you can also work on earning more. And we're going to cover all of these things today, especially in the second part of the presentation, speak about how I would save more, invest better, and earn more if I was to do it all over again. Today, I also said I would share my portfolio, and I want to tell you my portfolio is very simple. So, what we preach in this group and the way we like to do things is simple investing for the long term, evidence-based, low cost, broadly diversified, tax optimized index funds. And so my portfolio is very simple. 70% global stock index ETF, like the ones we talk about in the course, like the ones I talk about in the podcast. I've got an episode where we speak about the top 5 ETFs for stocks for investors in Belgium. And that's how I teach it in the course as well, right? So I have an online course where I teach how to invest, and this is exactly how I teach it. So 70% in equities and 30% in fixed income, high quality bond index ETF. So the same thing. It's the simplest way of getting the highest diversification across 2 asset classes and all sorts of assets, because each of those asset classes obviously invest in a lot of different instruments, right? So we have lots of stocks in there, lots of bonds in there. So great diversification. Now, my portfolio hasn't always been at that level. During the accumulation phase, and when I started, I didn't know everything that I know today. That's one. But certainly I didn't need to be, like, my situation was different. That's the important part. So asset allocation is not something that you change based on the markets or what you believe is going to happen. No, it's something that you decide based on your situation, right? So in the accumulation phase, no kids, single for half of it, together with my wife for the other half. I was at 80-20 and then 75-25, right? So these are, asset allocation, percentage of stocks, percentage of bonds. So 80% stocks, 80%, 20% bonds, and then that moved later to 75-25, as I was already seeing my retirement date coming closer, right? So I shifted when I realized, wait, actually, I'm not going to be investing until I'm 65. I'm not going to be contributing until 65. I might stop earlier. So shifted a bit more conservative. And then at some point I was like, well, next year I'm retiring. So I need to be careful, because if there's a market crash now, I'm in trouble. And when that's the case, when you want to reduce your exposure to market crashes and you don't have the same capacity to take risk, then you change asset allocation. It wasn't based on the stock market predictions or what I thought was going to happen or the global economy or geopolitical tensions or whatever. None of this mattered. What matters was my own personal situation. That's why I changed and I went to 60-40 for a while, right? And this is during the time where my portfolio was basically I was most exposed to change in the stock market affecting my life, right? And to reduce a little bit this potential impact, I reduced my exposure to the stock market and I increased it to the bond market. And then during the withdrawal phase, we actually gradually increased back the amount of stocks that we have back to 70-30, right? So we don't say a 60-40 in our case, right? It's our decision. We didn't want to stay. We didn't feel like that was right for our situation to stay at 60-40 for the rest of our life or lower. No, we went back to 70-30. And what I did as well to our portfolio is I added gold. So I did some research to find ways to basically improve my portfolio to reduce overall fluctuation, overall volatility. And adding a little bit of gold in your portfolio can do that. So we did. So that's my portfolio today. If you were to put this on a graph, this is kind of what it looks like. We have the accumulation phase, which we had a bit higher stocks for a while. We're very flexible. I had almost, I didn't have any responsibilities, and I could afford to take more risk because I was working and I could work for much longer, right? And it was very successful in my job, I was saving a lot. So being a bit more aggressive in the stock market was great. Now, then there was a transition phase where I was much more in a position where if anything happened, then it would hurt me more. So I had to be more careful. And then I transitioned into the withdrawal phase a bit later, which basically we start withdrawing here, no? We start withdrawing somewhere here. But this is really the whole transition phase, is like before you stop working and like a little bit after as well. And then now we're in like kind of full on withdrawal phase, which is 70-30, right? And we have obviously a number of factors that affect our asset allocation. We're not going to go into all the details here because we could speak about asset allocation also for 2 hours just on that topic. We're not doing that today, but I wanted to share my own perspective. Now, I'm not sharing this to give you a model to follow, right? Because as I said, this is something that I decide for myself based on my personal situation. Your situation is different. So don't just take one of those and be like, oh, Sebastian did this, so I'm going to do this. No, like yours might be different. So you have to do the work to figure out what is the right asset allocation for your personal situation, right? And it's not just a little survey like the banks would do for you, right? And be like, oh, it looks like your risk appetite is 3 out of 5, so let's give you this portfolio. after like filling up a one-page document. That's not how it works. There's more work to do than just that. But they do the minimum they have to, right? But if you want to do this properly, it's worth reading and learning about in the way we invest in index funds for the long term, Boca style, right? Anyway, and you can ask in the Facebook group. We're here to help. So that's my portfolio. Now, more details. My portfolio is actually in dollars, right? And this is because historically I was working in a country which has a currency that's pegged to the dollar. And so it's easier for me to convert dirham into dollar at a fixed rate monthly and put this in my portfolio. And at that point, I wasn't sure I was going to go back to Europe. So I didn't know if I was going to need euros. And so the best thing I could do is just optimize my whole system for what I knew already, which is I just want to invest in the stock markets. And so my portfolio is in dollars. And some people will be like, oh, but if the dollar loses value against the euro, you're going to lose a lot. You're taking risks. No, I'm investing in businesses, not in currencies. It's just that the ETFs I'm using are measured in dollars in terms of the value, right? But the businesses inside are still the same businesses as if I had invested in euros. So as you know, most of you in this group are investing, we own the same stuff. When you own a global index ETF, you own the whole thing. And whether you measure this in dollars, in euros, in Bitcoin, or in yen, it's still the same value, right? So it doesn't matter. Anyway, I'm just explaining the questions that I get often about this. Basically, my portfolio is in dollars, but I have 70% stocks, and part of it is in ESG screened developed market ETF, and part of it is in ESG screened emerging markets ETF, right? It's because at that point, there wasn't a better solution when I was investing, right? Now today, if I was redoing my portfolio, I might have a different ETF, right? But at that point, these were the ETFs that were more suitable for me. 20% bonds, and I have 2 bond ETFs, one that is inflation linked and one that is just a very high quality government bond. And the reason I picked those two is just historical. No? In 2013, when I built my portfolio, I was like, inflation linked or not inflation linked? And I was reading and reading and reading. I just couldn't find an answer that was satisfactory enough for me to decide for one and not the other. So I said, I'm just going to get both. That's it. There's no smarter thing here. It's like, I didn't know which one. I got both. And to be honest, it changes nothing, right? Because over the past 11 years that I've had those two, they've done about the same because they invest in very similar stuff. So long term, it doesn't change very much. But back then I didn't know. So today I would say just pick one and it's fine. You'll be okay. Now I'll pick one of those two and I'll be okay. It doesn't like they're both excellent. And then I have 10% gold. And this, as I said earlier, it's because I'm in the withdrawal phase. And I believe that gold, based on analysis of past data and a bunch of modeling, can reduce the volatility of a portfolio, which is more important for me in my current stage. And I didn't have gold when I was accumulating. No? Anyway, you don't have to have gold, basically, is what I'm trying to say. Don't worry about this. But then if you want, you can still read about this. And then when you know what you're doing, add it. Gold on its own, I wouldn't value gold just for gold. I value gold because it's part of the portfolio of diversified and like with different asset classes. Gold here has value only because it is together with stocks and bonds and only because it's a small part, right? Gold on its own, I wouldn't own, right? It's because it's part of my portfolio. It's the portfolio that I want to own, right? That's the results. That's what I'm looking at long term, and that's what I want to maintain. Right, to get out of the way, because there's also gold haters around, and I understand them. I agree with most of the arguments, but as part of a portfolio, it plays a really nice role. So here we go. Key lessons on index investing. Index investing is amazing. It's flexible. So I went from Dubai to Belgium. I brought everything, no problem. One thing you need to know is that you need to keep records, right? So if you are an international and you're in Belgium for some time, you might move, or you're Belgian, might move abroad, just make sure that when you change broker, try to keep the records of transactions, try to keep the records of basically as much as you can, right? Mostly transactions in and out, but also the value of the portfolio, all of this, because it's easy to change brokers, right? But the brokers don't transfer all the data to the next broker. You want to keep that for yourself. And sometimes when you change countries, you want to keep record of where the money comes from. So you need record of income and records of your investments, because then you have the whole history, right? And you can prove where the money comes from and all that stuff. Anyway, so this was important to me because I came back from a country from outside of Europe, right? But so it's flexible because you can easily change brokers. If something happens with the broker, it's like, okay, fine, move to another one. It's just a bit of admin. You can easily move countries. So for all the expats out there, much easier to move around with ETFs than to move around with your real estate. So very flexible, love it for that. Taxes are important, and it's important to understand them well. There is still today uncertainty around tax and transaction for certain type of ETFs, whether it's 0.12 or 1.32% for some ETF. There's still uncertainty, and that's annoying. So just understand. I think understanding this taxes well is important if you do it on your own, and if not, get good advice from someone who knows to make sure it's just optimized for yourself. Right now, they have impact fairly minor, but if mishandled, actually, especially on the tax on transaction, if you're not paying the right tax at the right time and there's delay or errors in calculation and payment, it can lead to penalties, and that can increase quite fast. So for all those of you who are investing with brokers who are not dealing with the tax and transaction, I'm saying it one again. I'm saying this every time I can, but basically, you have to pay your tax transaction, right? And if the broker is not doing it for you, you have to do it yourself. And there's a lot of brokers that people talk about in the community, in the Facebook group here and outside in other groups, that do not handle your Belgian tax. That's eToro, Interactive Brokers, Trade Republic, Trading 212, Bucks, I'm not completely sure anymore. But a lot of the brokers that are kind of foreign brokers, they will not do this. They might help you with some reports, but they won't make the payment. Make sure you do it so that you're on the correct side of the law, right? Now, I am dealing with my own tax and transaction. I have a broker that's not a Belgian broker because I come from outside, and I have still a broker that invests in dollars and with which I've learned to deal with the tax transaction and do the math and pay it on my own. And I can tell you it's a pain long term. So for those of you who have the choice between a broker that does handle taxes and a broker that does not handle taxes, pick the one that does. Even if it's slightly more expensive, I think it's a really nice upgrade in quality of life. It's a bit less stress. I guess the people who can sort of maybe afford, like maybe those who work with an accountant because you have a business or something, maybe there you could say, well, it's fine, it's taken care of by my accountant. But then still you want your accountant to do it right. So you have to check stuff anyway. And most accountants don't know about this tax and how to handle it properly. Anyway, let's carry on. A lot of rambling about taxes. Yes, evolution. A portfolio can evolve over time. And it can have more than 2 or 3 ETFs because as you move from one place to another, or as this new ETF comes up, or you change brokers, you might end up with more than 2 or 3 ETFs, and that's fine, right? Just kind of try to manage it so that you don't have 20 because every time there's a new one, you change. No, keep it simple, right? And then your asset allocation must change with personal situation. And there are no perfect portfolio, but there are many perfectly fine portfolios. My portfolio is not perfect, right? If I was to create a portfolio for myself today, it wouldn't be this. But my portfolio is perfectly fine. And that's really important. And I certainly don't have any incentive to sell to create a perfect portfolio. No, there's no need for that. And as time passes, the perfect portfolio will change. And we said there's no perfect portfolio. Anyway, let's carry on. Right. I see there's already quite a few comments. That's great. I'll come back to the questions in a minute. Not in a minute, but when like in between the main parts of the presentation. So key lessons on financial independence. Listen to me, I came up with while preparing for this presentation. To me, efficient investing is the engine, right? You need a good, efficient engine, right? That's going to move you from one place to another while using your fuel as effectively as possible without pollution. So savings is the fuel, right? So if you want to progress financially, you have to save, you have to use fuel to put in the machine, in the engine, which is efficient investing. And high income is essentially an accelerator. It's a way of putting more fuel in the engine. Geez, this is such a smart analogy. Imagine I'm such a genius. But I think this analogy is quite interesting also because if you want, and if you only focus on trying to go as fast as you can, you could crash and burn. So be careful not to crash and burn. And I'm saying this because part of my journey, I think at some point in my journey, I was close to burnout, right? And basically, we'll come back to my journey a bit later, but I worked in a very difficult environment, right? With difficult clients, and I took a lot of responsibilities, and I delivered high value results and presented to some of the highest decision makers in the region over there in the Middle East. So a lot at stake, a lot of responsibilities, and very few other people were able to do what I was doing. So both my employer and my clients ended up relying a lot on me, and I was managing basically 3 projects, like 3 times as much as what I was normally supposed to. We needed 3 project managers for managing all of the stuff that I had developed. And it was only me who was able to, because every time we would bring one in, he would get kicked out. Like he wouldn't be able to survive or handle the difficulty and the challenges. So it took a while to find the balance, right? So there was a point where I was close to burnout. The good thing is I was also on my way to financial independence, and so I had leverage, and I simply imposed my conditions. Right? Well, not simply. It was hard because I didn't realize that I had such power. Part of the story is that I spoke to my boss and I said, I don't have to be here. This has to change or I'm going. I don't even need this job. I don't even need this money. I said those words, right? I didn't need the money anymore. I had enough savings that I didn't need to work for 5, 10 years easily, right? So things had to change, and it changed, right? So yeah, so anyway, financial independence gives you power at work. So even if you're close to burnout or if it's a very difficult situation, use your power, right? And don't let it go crash and burn. Anyway, obviously, most people won't have this problem, I'm hoping. But certainly if that's your situation, then financial power, your personal finance give you power. Use it. And don't only focus on increasing your income as high as you can, because that could lead to these situations that are tricky. So find the balance, right? So while we're talking about optimizing many things in my presentation today, and we're going to talk about a lot more about how to make more money. Never at any point I'm saying you should go all the way and do what. I think it's about finding the balance, right? It's finding what works for you, optimizing for your own life and your personal situation in a way that you're optimizing for happiness, not just for money. Right, let's go. Key lessons of financial. Yes. Before reaching financial independence, make sure you do your numbers properly. If you plan on quitting your job, do the math properly, include buffers and backup plans like I did. Plan for the worst case, enjoy the real case. The way we plan financial independence is like we look at what's historically the worst scenario that happened. Oh, market crash in the 1930s, Great Depression, market crashes in 2000, 2008. The stock market in the 60s and 70s was rough. Well, if your scenario, if your plan can survive those past, historical events, then it's likely we'll survive, a more normal scenario. And that's what happened to us. No, we planned for the worst case scenario, in the sense that our portfolio was, we could handle stock market crash. But it didn't happen, which means our portfolio grew more than the worst case scenario, which means now we have more money than we really need in a way, right? And that's the way we plan for financial independence. We don't plan it in a way where we take chances and maybe it will work. If the stock market is on our side, we'll be fine. No, we plan it in a way that even if there's a stock market crash, it's built for that. We have built our investment strategy so that even in stock market crashes, we do well because we know it's for the long term and because we know we're not withdrawing too much and all that. Anyway, planning financial independence is for another day. More details, we can go into a lot more details, but again, and then transition your asset allocation accordingly. We talked about this earlier, right? Something else that's important. So I've noticed in the group there are a few people who are at financial independence or getting close, or they've passed it and they're wondering, like, what then, right? You reach financial independence, you can quit your job. What do you do? And it's not an easy question. It's basically a similar challenge to people who reach retirement at 67, 65 now, and 67 later, and they don't have the fulfillment that comes from just having to do work, right? The colleagues, the energy, the drive, the objectives, the things that you have to achieve, the things that the people you interact with. And basically, there's a lot of satisfaction that comes from it. And that when it stops, you don't have it from that source anymore. So if you are on the journey to financial independence and that it's going to be earlier than planned, think about this early as well. Like if it's earlier than the official age, but even if it's at the same time as the official age, think about this earlier, right? Think like connect with people who are on a similar journey, figure out ways to contribute outside of work, find meaning outside of work. That's really important. Focus on creating value, being helpful, making a difference. And one thing that's really important is I realize that exploration is a muscle. So a lot of people feel like they don't know what they would do if they didn't have to work. Well, it's because you forgot how to explore and how to discover new things. When we're kids, we are always learning and discovering new things, activities, places, everything is new. And at some point we get into this hamster wheel and there's just no newness, right? And everything new is given to us at work. So exploration is a muscle. Most people don't use it, but if you want to be happy without work, you have to learn to be happy without work. It doesn't necessarily happen naturally. I guess I'm lucky that I'm very driven and I have lots of plans and things I want to do in life. So I don't need work to feel happy and, fulfilled. And now, I've created a bit of work for myself with Fire Belgium, but I'm enjoying it every second of it. So it's very different. And it's my choice, and I can stop anytime. It doesn't matter. I do what I want. That's it. It's quite amazing. And I love it.